Good evening, everyone. It was a run in place day today. That was the expectation pre market when we reviewed uh, at 9 o'clock. Put that up there. Give a second here. Yeah, we went over the highs and lows pre market and saw that pretty much things were likely to be locked uh, in between support and resistance. And that's exactly what happened today. Um, we got this inside day in all of the indices right at the top of the range. And look, it was relatively impressive the fact that it gapped up from this big red bar, which was pretty deep into the bullish reversal day. So, what's happening is we're getting this consolidation at the top of this range overall. And the question still, which is unanswered, is can it take out Friday's high or will it take out Friday's low? Based on holding up today at the top of that range, it does lead to a somewhat bias that it can take out the high. And so now we'll see if that can do it tomorrow. And we're looking at all four of the indices here: the S&P 500, the Nasdaq 100, the Qs, the Dow, of course, down here, which showed some relative strength by not having much of a retracement down into that big green candle as the others did. And IWM was a pretty deep retracement, more than 50%, but it gapped up like everything else did and held on. So let's take a look at what this looks like intraday, which was a pretty boring go nowhere day, unfortunately. After the gap up, it just flatlined all day long. And I call this kind of a pattern a frog in a blender pattern. And the reason being is it gives signals that it's ready to go up. Then it begins to fail as it did here, like it's going to go down, and then it retraces, it's going to go up. And then even like here, you get a breakout failure, it's going to go down, and it goes nowhere. And as an intraday trader, you have to be so careful of this kind of a setup that you just don't get chopped up. The proverbial frog in a blender. You're going long, you're going short as an intraday trader. But look, if you have a clear bias that says, like for myself, looking at a 5 minute chart like this, where prices are, here they were above the 20 MA. Oh, here they were above the 60 MA. Why the 60 MA? Because it's equal to the 20 MA on the 15-minute chart. And then the 200 MA is roughly equal to the 20 MA on the hourly chart. So when I look at a stock or an index where the moving averages are above each other, 20 above the 60, 60 above the 200, especially if they're pointing up, the blue line is the opening price and the red line is yesterday's close. So if you look at your watch list and you have that watch list color coded by green above the open and green above yesterday's close, you got two green columns. So looking at that versus if you're seeing other things that have two red columns, well, immediately you know what's showing relative strength, what's showing relative weakness. Just a real easy way of picking out initially what's strong and what's weak comparatively. Now, as you go to that 15-minute chart and you look at a chart that is above its moving averages and the moving averages are aligned like this, prices are above the open and above yesterday's close, even though you see something like a breakout failure, don't short it because the odds are against you. So it's a real simple, easy way, in a systematic way of determining, look, I see that there was some weakness here, but overall, this is showing strength, so I'm not shorting. Now, if prices should, in the latter part of the day, typically around after 2 o'clock, if prices were trading below the open, right, and your watch list, that's turning red, of course, and now the 20 MA is pointing down and it's under the 60 MA, and the 60 MA is over the top of prices, even though the 200 is there, if there's a void below, that now opens up the door to a bias where things can deteriorate and go lower. Otherwise, moving averages intersecting prices, they're flat, things are going nowhere. You just sit on your hands and do nothing. All right, so let's take a look at a few stocks and consumer discretionary. So it's just chopping sideways here, but again, the gap up and the relatively good close opens up the door to, if it can take out Friday's high, it can move up somewhat higher into this void below, maybe into this gap fill. And we can look at what showed strength in that particular ETF. Let's sort this here. And right at the top of the list is Tesla, which has been the weakest. Many times what has been the weakest can bring up the rear. And while it did not take out Friday's high, we've got now 3 bars, and you can see it's right in this area of prior support. Maybe this can get going. It's a good candidate for a put spread, right? An income trade with a spread under $200, give or take. This one has also been weak, and you see it consolidating here. And so that particular sector, right, consumer discretionary, was the best performer today, up over 4%, but majority of it on the gap up. Really no big deal. It was an inside day, didn't go anywhere. So just because something's up 4%, that doesn't mean it's an opportunity. Biotech did well. Just another sideways pattern. Telecom took out Friday's high, so retesting there. Maybe it can do something. Looking at what did well, there's a nice reversal. So what I'm showing you here is looking at ETFs, and then that's linked to the stocks that are in that ETF. And then we could quickly see, all right, what did the best on the day. And looking through these patterns, there's another nice bottoming type of a pattern. Communication equipment gapped lower here, closed on the low, it gaps up, it's up near the high, looks pretty good. Gold, that's a little bit of a reprieve because the dollar came in. The dollar goes up, that'll go down again. Aerospace and defense, what did well there? Rocket Labs, low price stock. Kind of messy, but a bottoming pattern. And again, this is what we call the factory work of looking at what looks, there you go. There's something that looks great. It's been in an uptrend. It's a downside shakeout going sideways. It's got some resistance over there, but you can see the relative strength compared to so many others, that it's not in a downtrend. And so going through these, technology did okay today, up 3%, but inside day, we don't know that it's out of the woods yet. Software, we see similar patterns. And then what did well in software? What did the best? It was a big day. And can it continue to go higher? Well, it's a big wide range bar on a reversal day. That looks great. So you're going to spend a little time following these. They're the kind of patterns that could easily whipsaw back in the other direction. Retailing, inside narrow day, doesn't look much of anything. Communications, which has been doing terrible. Financials are in the news. Lots of financials going to be reporting earnings. Bank America going to be reporting, I guess maybe it did after the close or whether it did before the open. Some others, but there'll be more coming out this week. And home builders, very much influenced by interest rates. And you can see this sideways price action there. And materials, that typically doesn't do well in a market environment like this. And insurers, just look, so many overlapping bars. What can you do with something like this? In my opinion, just absolutely nothing. Of course, go down into individual stocks and something like this. If it could trade over Friday's high, it could pop up there a little bit. But overall, we're still dealing with a pretty messy market environment. So we're certainly not bullish. We're not excessively bearish in the moment, but ultimately it does look like prices could go lower and probably should go lower. You see the weeklies are consolidating here, but as we go down to the monthlies, still a pretty big break, and the significant support is down below here. Ultimately, I think going down there could set up a great opportunity for the end of year rally, but we'll see how this unfolds. So I hope this helps keep things in perspective as to what's happening in the current market environment. We'll see what tomorrow brings, and we will be live again tomorrow morning at 9 a.m. We'll talk then. Bye bye.